Your Money Moves show starts right now here at Frontier Africa Reports. I am Bosin Amafayewa live from FMDQ Studios in Lagos, Nigeria.
It's Tuesday, August the 26th, and I hope you've all had a great day, everyone. I am Melissa Enoch, also here on the show.
All right, let's get the show started in Sudan. The United Arab Emirates ban on port access for cargoes from Sudan is disrupting oil flows, with at least one vessel struggling to offload its cargoes, according to latest news. A Swiss tanker carrying 80,000 tons of Dar blend crude from South Sudan has been idling near the Fujairah for a week without discharging, according to shipping data. The oil vessel that sailed from near Port Sudan may be forced to divert to Singapore if the ban persists. Fujairah is a key hub for shipping, fueling, and crude trading, which makes the restrictions a major problem for South Sudanese exports. Meanwhile, the Ghanaian President John Mahama arrives in Singapore today for a three-day state visit. The Ghanaian president says in his welcome address that Ghana is open for business and also spoke to a closer collaboration by Singapore towards the new Intra-Africa Trade Report. Now let's get more from his presentation.
We're here to learn, to partner with you, and to deliver prosperity to our people. The theme, Region Capabilities, Charting Sustainable Growth, speaks to a partnership that is both urgent and full of promise. We live in a rapidly changing world. The post-Cold War world ushered in the era of globalization. It sparked much excitement about the endless possibilities that were open to mankind to create prosperity for the greater majority of the world's population. The cheers and backslapping that celebrated the Millennium Development Goals, which pulled 1 billion of the world's people out of poverty, are becoming just a pleasant memory of the past. The death knell of multilateralism is sounding. Global relations are becoming more transactional. Tariffs and retaliatory tariffs are flying fast and furious. The effects on the global economy are still yet to be well understood. But in these unpredictable times, we must forge new alliances. We must open new opportunities and possibilities. We must explore new markets and new investment spaces. In a world of tightened financial conditions, fragile supply chains, and rising protectionism, South-South collaboration is not optional, it is essential. Africa and Singapore must be champions of open markets, trusted rules, trade rules, and practical partnerships that deliver jobs, technology transfer, and shared prosperity for our people.
And that was Ghanaian President John Mahama speaking in Singapore earlier today to collaboration between Singapore and Africa towards the new Intra-Africa Trade Agreement. Now let's hear more on today's news now from Melissa Enoch. Melissa?
Hello there, Bosing. Thank you very much. Let me start with earnings news. Old Mutual of Kenya has announced a woeful 98% fall in its half-year 2025 profit to 5 million shillings as insurance revenue slipped 2.4% to 16.4 billion shillings. The company reports that its insurance service loss widened to 303 million Kenyan shillings from a year ago, while net insurance finance loss was wider at 2.5 billion shillings. However, the insurer reports a total income jump of 12.8% to 4.2 billion shillings in the first 6 months of 2025, while total assets climbed nearly 6% to 79.2 billion shillings. In Mozambique, President Daniel Chapo has launched a $40 million mutual guarantee fund looking to provide credit guarantees for at least 15,000 micro, small, and medium-sized enterprises. President Chapo says the fund, financed by the World Bank, will help MSMEs overcome challenges such as high interest rates and access financing, especially for young people and women entrepreneurs. He described the initiative as a tool to turn dreams into businesses and ideas into jobs. In other news now, Ghana is currently hosting the 2025 edition of the Future of Energy Conference, an annual platform that was designed to drive ideas and investments into Africa's energy sector. Organized by the African Center for Energy Policy, the Ghanaian energy industry has used the opening plenary of the summit to highlight recent developments in the sector. Let's take a listen.
If Africa is to achieve inclusive economic growth and secure its rightful place within the global economy, affordable, reliable energy must be pivotal in whatever we do, and energy poverty must be dealt away with. Sincere collaboration between governments, the private sector, and development institutions is central to this transformation. Governments must provide clear policy direction and regulatory stability and predictability. The private sector must be brought on board because the private sector brings on innovation, efficiency, and they mobilize the needed resource and capital for energy sector investments. Our multilateral partners must not be left out. They must help de-risk projects and expand concessional and blended financing mechanisms. Indeed, Ghana's experience has shown the importance of this balance. In recent years, we've worked with independent power producers and financiers to review legacy power purchase agreements, ensuring tariffs are not only competitive, but aligns with our fiscal capabilities whilst protecting investor confidence.
Finally, in Nigeria, the Debt Management Office's latest bond auction after the reopening of 7-year government paper was overbought but not at record levels. The bid rates were high at the auction as investors expect the level of government borrowings to increase to accommodate the power sector bonds and pension areas payments of 757 billion naira, sources at the DMO tells Frontier Africa reports on Tuesday. The Debt Management Office raised the rate on the 7-year paper by 2.10% to 18%, as subscriptions printed at 268.17 billion naira across the two offer size. I am Melissa Enoch, and that's it on News Now. Stick around for Markets Around with Bosim just after the break at the Ticker Tape Room.
All right, welcome back to your Morning Moves Tuesday. Let's get on the markets, as always, checking through with the equities market space. And you can see a couple of green shoots today. The market's getting a bit more on the upside as we begin to see the final few sessions of the month of August. That's effectively taking the first 2 months off in the third quarter. Effectively September, we're going to begin the final 4 months of the year. So the Nigerian equity side was up by a quarter today. We saw this recovery towards the end of last week that began to firm up again on Monday with the banking, insurance, as well as non-banking names trying to make some further gains. The NGX index about 141,748 closed for today. The BRVM next door in Cote d'Ivoire, the composite, was stronger by 1.06%, the biggest exchange in East Africa. That's the Nairobi stock market, 1.14%. On the Osha index, 172.35, quite a couple of earnings still coming through from the Kenyan market, investors buying into that. The Egyptian market, however, pulled back very strongly Tuesday, 1.25%, 35,354, just as the Egyptian stock market announced to have a new chairman who will be taking over as the head of that exchange, Mr. Madboli. That's it. We say congratulations to him. The GSE, that's the biggest exchange on the continent, down today on the oil share by about 0.5%, 102,466. Zimbabwean market was better by 11 basis points, 205.97. That's the ZSE, by the way. Let's get and see a few of the government bonds. You heard earlier, Nigerian Debt Management Office floated 2 papers for the month of August. Of course, there was a pressure as far as the market is concerned. The rate went high. The Debt Management Office took less than the offer, that less than the subscription that were placed on the market by investors. There was an overbought of those 2 papers again. But if you look at the 10-year paper for Nigeria, that's where it was sitting part on since Friday, 15.681%. But take a look at the top headline. You can see on the dashboard today, the South African 10-year paper printing 9.59% today, according to investing.com, 1256 GMT, 0.16%. The Kenyan market, a 10-year paper, was printing 13.376. Investors chasing yield across emerging and frontier markets, 0.13%, as everyone considers the likelihood that the U.S. Fed will cut interest rate by September. A bit of a signaling from Jerome Powell on Friday, the Jackson Hole, but still the bets are still whether this will happen in September or perhaps November or early next year. Let's take that into currencies market. The rand fell today 0.14 on the dollar, 17.64. The Nigerian currency eked out 4 basis points against the USD, 1,535.54. The Egyptian pound finished today 48.59, 0.20%. The Kenyan shilling 129.18, holding it about 0.02% on the dollar. We haven't seen major movement in the Kenyan shilling against the US dollar over the couple of sessions. But let's move on and check through the commodities deck today. U.S. President Trump tweeted that he's sacking Lisa Cook, a member of the Federal Reserve governor. She says she's going to remain in office. She's the only black woman on the board of the Federal Reserve, the first black American to hold such a position. She says she's staying back. There's no cause to remove her from office, she said, in a response to President Trump's tweet. Now, the stage is set for a big legal fight between Mr. President and Madam Lisa Cook, who is staying back as the governor of the Fed. So that is a bit of a risk sentiment for investors. So you saw oil prices off by 1.54% for the London Brent and the US WTI 1.71%. Those sentiments, as far as risk is concerned, also pile into commodities. Let's move on to gold, and you can see gold prices today down by 0.21%, around 12.43 GMT. The risk sentiment pulled the bullion down to about 3,424. Again, news came in early Tuesday that China has done about 123% increase in terms of its gold imports via Hong Kong since 2025 started. That's the numbers as far as the end of June as the numbers we had. So the Chinese authorities, the central bank, the PBOC, has been ramping up on its gold reserves steadily, and that's one of the part of the actions that is taking gold prices at that highly elevated level. Platinum, if you look at that, it's also down slightly, 0.05. However, that basic resource, 1,338 Platinum has been about 25% upside this year. It's been a very good rally since President Trump announced, of course, that 50% tariff on some of the metals or basic resources or materials that are coming into the United States. Let's finish off at the soft markets where you look at cocoa and coffee prices. These prices were sharply lower from where we finished on Monday evening. Coffee prices down about 2.6%. Cocoa prices down 4.65%, sharply lower. These are futures prices, by the way. So you can see cocoa prices now about to 7,651, despite the news that Côte d'Ivoire will be supplying about 1.9% less of its exports to the global cocoa market. Then coffee prices are 367.70, 12:45 GMT, by the way. So we look at our future prices, those products continue to trade. And of course, palm oil, 1,047.33 cents, down by 0.14%. And those are some of the market prices at this time, just about past 4 here in Nigeria, live from the FMDQ studios. Of course, that's about it for today. That's where the wrap, as it were, on the show. Do have a great day, everyone, and we'll see you again tomorrow.